Understanding the value of a business is hard for everybody. Even as an experienced business valuation professional that is looking at and valuing over 1,300 companies a year, there are so many unique elements and scenarios, situations that we come across that impact the value of any business that we've never seen before. So if you are looking at valuing the business, typically I get about 30 phone calls a week. And of those 30 phone calls, one of the most common questions is, what's a good multiple that we should be transacting at? And that is a loaded question and very difficult to answer because ultimately multiples are derived from private transactions of similar companies. And when you're looking at those companies that have privately transacted, it's understanding, okay, how does this company compare from an operational standpoint, from a financial structure standpoint? What were the purchase terms associated with the transaction? Because those influence what ultimately you're transacting at. So you're looking at transaction prices and not business value at that point. And when I say business value, I'm referring to fair market value. So ultimately, multiples are hard to assess and use really quickly to truly understand the value of a business. You could look, like, we write articles galore on valuation multiples, but we always provide a broad range. And ultimately, we've worked with transactions that fall below that range or above that range. It truly depends on the actual company itself and understanding the revenue and the cash flows and the assessed risk inherent in achieving that cash flow on a year-over-year basis. So if you are looking to buy a business or sell a business or just understand the value of that business, like, you should always be working with a professional like myself at Peak Business Valuation, or with all the hundreds of other business valuation firms out there in the US. You should be working with someone to just understand the value of a business. Like, it shouldn't be left to guesswork. It should be left to professionals who are scrutinizing and digging into the financials, digging into peer comp, industry economic analysis, understanding these transactions. Because I can send you transactions of companies that are similar, and you will personally look at them and have no clue what to do. So, reason being is, if I send you a data set on FedEx routes, for instance, and you see EBITDA multiples at like 2x all the way up to 5x, it's like, where do I fit in? Like, where does this company fit in from a multiple standpoint? How should it be transacting? So, business valuation is important. It is an insurance policy, and it will help you understand the value of a business for negotiation purposes, for growth purposes. Like, we work with over 90 SBA bank lenders across the country, and we are their trusted third-party business valuation firm. And you should be if you are getting an SBA loan as a buyer, the SBA lender is already going to order a business valuation. But if you're trying to negotiate and lower the purchase price, you will either have to go to the SBA lender and say, hey, let's order the business valuation first, or you will have to order the business valuation from a party like us beforehand so that you can negotiate the price prior to working and getting SBA financing. Because if you're not going to buy this business, and let's say our value comes in $200,000, $300,000 below a $1 million asking price, like, that might just kill the deal altogether. And the one thing that I've learned from buying businesses personally is there is so much time wasted in assessing a business. And if you come across, like, within due diligence, you figure this out, and it's, oh, these financials don't make sense, or there's an issue with the operation, or there's something wrong with inventory management or with legal. There's always something that pops up that can derail the conversation with the seller. And ultimately, it comes down to first understanding the value. Because if the value is in a good spot, like value relative to asking price is relative and similar and close enough that you can easily negotiate higher or lower, like that is good. That's a positive sign that you're looking at a business that is healthy. But if there's something that's drastically different, because ultimately as a business valuation firm, we're digging into all the information that we request from the seller. And if we have questions that aren't being addressed, like we see red flags on a daily basis when assessing the value of companies. And if we are helping and working with you, we can see what that is. We could point out that red flag and be like, whoa, pump the brakes, something's wrong. Like, we need to dig into this further. Here's why, and how it could impact the value of the company. So I'll stop there. I could chat forever. But if you have questions about buying a business and business valuation and the services that we offer, like, always feel free to give Peak a call, 435-359-2684, or you can visit our website, which should be in the comments down below. But you can visit our website at peakbusinessvaluation.com. We're always here to help and be of assistance. So again, my name is Ryan. Feel free to call me out and ask for Ryan. Happy to help. So enjoy your day and good luck finding a business to buy.